Everyone, welcome to this week's edition of the Money Talk NGX weekly Heatmap review. This is one of the most dramatic week we've seen in recent times, and the market started the week by breaking the 6-day streak and climbing for 2 days. And we saw that on the third day, there was a sharpest single day crash for the year. Now let's walk through what actually happened and why. So for the week, we saw that we have 2 positive days and 2 negative days. Monday started with a positive one of 0.95 and brought some light into the darkness we've had in the previous week. Tuesday followed suit by even having a larger growth of 1.06%. Unfortunately, on Wednesday, we had the sharpest single day decline of the entire year, with the index dropping by 2.35% in one session and wiping out 3.64 trillion in market value. We saw that Dangote Cement alone fell 10% and lost 1.8 trillion in value, which is significant because that single drop knocked Dangote Cement off its position as Nigeria's most valuable listed stock, and MTN took over the position with 17.4 trillion, followed by Boa Foods and Airtel Africa. On the third day, on the fourth and fifth day, we also played with 6.4%, 0.64%, and 0.66% respectively, to close the week at 232,049 points. Over the full week, the total market cap dropped from 152 trillion to 148.91 trillion, and we currently have the year-to-date return of 4.12%. That's 49.12%, which is still, compared to last year's performance, still ahead, but we've come down from almost about 60% earlier in May. Over the 17-day stretch ending Thursday, we saw that the combined net worth for Dangote and Rabiu fell by 3.5 billion naira, and this shows that their investment or their net worth is really influenced by what's actually happened in the Nigerian stock market. We'll be looking at what could be the drivers for this movement in the week, and as we spoke about last week, the NGX has changed their pricing tier to a tiered pricing rule now, which means not all stocks need the previous 100,000 trades for them to move. We can see this impacted the likes of Aradel, the likes of Airtel, Dangote, and during the week, and we'll be looking at this sector in the coming slides. The next thing that could have impacted is the current T+1 settlement that pushed brokers to sell faster. Effective June 1, the NGX has made the timeline to be T+1, which is compressing the entire trade settlement timeline. Brokers now have to issue contract notes the same day and allocate trades within 30 minutes of close. If a trade isn't allocated in that window, it automatically gets routed to the broker's own account, and the broker isn't allowed to take profits from it. So what do brokers do during high volume sell-off like Wednesday? They prioritize getting out fast to avoid the risk, and that urgency itself adds to the selling pressure specifically for large cap stocks. The third thing was that, as we spoke last week, the DMO issued some shares, and those shares. So as we spoke about last week, the DMO had a board auction on June 22nd, and they allotted 1.22 trillion naira at a stop rate above 18%. This, as we spoke about, some investors pulled out funds from the stock market to invest and receive value for this, and this also impacted the market. Now let's look at those that gained during the week, and the top gainer here is McNichols PLC. I believe this is a rebound from previous week's decline. So last week they were down, and now they are trying to recover. It's not a very penny stock. It's over 8 naira, so it's not, we can't really calculate a penny, but it's also relatively a penny stock and is a thinly traded stock. So this it's not about re-rating, it's just some manual people trying to get the value when it's cheaper. We also have International Energy Insurance, and last week we saw that the stock fell by 28.83%, and now it's recovering by 14.43%. We see this as a partial bounce back after previous week's fall, and we expect that some investors might want to take advantage of that fall to buy some stocks. The same thing happens with GTCO and First HoldCo. We saw that there were massive falls last week and they both gained during this week. We saw that as them recovering from the CBN's HoldCo draft that hit them upper week. And we expect that in the coming weeks, we would see this kind of volatility for some of these stocks, with investors trying to evaluate how that would impact the banking and financial services sector. As I spoke previously, Airtel Africa came up by 10%, and this is backed by the active buyback Airtel is currently doing that it started in May. The plan is to repurchase 7.7 million shares to optimize their capital structure, and that program is currently supporting the stock price, which is why it likely held up and gained during the week when the broader market fell. On the losing side, we have the top losers, and we have National Express leading that move. In the year, we saw that they actually come up massively from the beginning of the year till date. This is investors trying to take profit from their position. At some point, it moved from just above 2 naira to over 8 naira. That's over 400%. And currently, year to date, is traded at 52 or has gained 52%. So even with this decline, it's still above the total market position. We also have DEAPCAP, which also fell by 23.31%. We assume that this is based on the rebranding that happened this week, and investors are trying to evaluate what the company is at the moment. The major strategic pivots like this, where they are trying to pivot into mining and metal finance, is something that investors need to rejig their books to see that the value they've placed on it, does it worth it, or they need to reprice it. And even with this fall, we can see that they've also appreciated during the year, so they are still positive on year-to-date basis. We also have Abbey Mortgage Bank. We saw Abbey Mortgage Bank coming up 3 weeks ago when they came out with the news that they were moving to be a commercial bank. They gained, but starting from last week, they've been falling massively, and they fell 20.30% this week. Aradel also fell today or during the week, and it was the most traded stock with 4.29 billion traded during the week. Some of the reason for this might be due to the results that came out. So they published their Q1 2026 results, and their 2025 full year results also came out during the year. These two results were probably below expectation. We saw that in the result that came out for 2025, there were some one-off gains that they recognized from the acquisition, and from recognizing this, brought their somewhat overshoot their earnings per share. We saw that with the position for Q1, the earnings per share dropped from over 150 to, when we analyzed the 15 naira quarterly earnings per share, that's just about 60 naira. So I believe most investors are repricing Aradel now, and we might see further decline, but I believe Aradel should bounce back when it is fully re-rated. We also have Regency Assurance falling 18.56%. The story behind this is they just signed a right issue agreement to raise capital, issuing 3.2 billion new shares at 95 kobo each. The 95 kobo was close to what they started the week with, but it fell by 18.56% to just about 77 kobo during the week. And we believe that the expectation is that this new issuance will dilute existing shareholdings and reduce the earnings per share. And most investors are repricing the stock based on this. There were also some significant happenings in the market during the week. One of them is the financial service sector, with Providus-Unity Bank completing their merger. The Supreme Court has dismissed the shareholders' lawsuit seeking to block the merger and directly sanctioned the consolidation under the Section 22 of the Supreme Court Act. For this, the Unity shareholders will be getting 3.18 cash per share, or 18 Providus shares for every 19 Unity stock share held. The combined banks now has around 230 branches with over 2 trillion in assets and over 1.2 trillion in deposits. This consolidation is also following the CBN's recapitalization program, and this has made it successful. The other news we have is from Lafarge, and they are now officially HBM Nigeria PLC. This follows Okim's 1.1 billion sales of its 83.81 stake in China's Jiaoying Cement. And the reason why this is remarkable is because this led to would have been one of the drivers for Dangote Cement and Boa Cement both falling during the week. The expectation is that the HBM Nigeria is going to increase its capacity and might possibly lead to some decline in pricing or make the pricing more favorable for buyers. And this would impact the profitability of the cement industry as a whole. We can see that the shares has gained 135% year to date, moving from 134.5 starting price to the current price of about 3.17. So as we spoke about previously, we have the CBN terror financing freeze, which on the 24th of June, CBN has ordered all banks and financial institutions to freeze account of 6 individuals and 4 currency exchange operators that were linked to terrorist financing. And the list was provided by the US Treasury, and they've also effected it in the Nigerian market. So they are sanctioned both in Nigeria and on the US financial service sector. This adds some operational overhead to the bank, and when they are meant to be dealing with the new HoldCo policy, they are also dealing with this policy. As we spoke about, Regency raised some capital and they are raising 3.2 billion at 95. We've spoken about that. The second significant one is Fortis Global Insurance that is cutting their share count by 75%. So they basically structuring, and for all shareholders, those that own 4 stocks will be getting 1 stock for every 4 stock they own. These are mostly due to Circular 26.1 that requires tighter capital rules. The NIMC also signed, or the president also signed, the NIMC Act of 2026, which is now the new Identity Management Commission Act that took effect and is trying to improve identity of Nigerians and making sure that there's a form of uniformity in the digital ID infrastructure and large fines for any data breach by any of the data users. At this moment, we'll be walking through the Heatmap as we did last week. We'll be starting with the financial service sector, and we can see this is a different story from last week. Last week, we had majority red, but fortunately this week, we can see that many of them are turning green, and then fortunately, some of those that were green last week are now red. And we have GTCO gaining 10.69%, Zenith 4.5%, HoldCo gaining 10%. Those were the significant gainers during the week, and we can see they were also the top losers. So First Bank and GTCO were some of the top losers last week. So this is people re-evaluating and probably bargain hunting to get them at discounted prices. We would also be moving to the consumer goods sector and moving to an equal weight. We can see this is a mixed story with Champions Brewery gaining again 3.79% and the likes of Dangote Sugar losing massively 8.11%, Honeywell Flour losing 5%, and Nigerian Breweries losing 8.23%. We spoken about McNichols consolidated already, and they were the top gainer for the week. For the industrial goods sector, it's also a red zone, deep red zone, and we have 3 stocks gaining slightly with Triple G, only the massive gainer for the week. For the other stocks in the sector are declining, and that could be a testament to the entire market itself. In the ICT sector, more positive with 50-50. So we have 3 gainers and 3 losers during the week, but the top cap stock, MTN and Airtel, were both gainers during the week. We have the oil and gas sector. It's a red zone across for those that moved during the week. The others stayed flat for the week ended 26th. For the service sector, we have a mix with Sky Aviation Handling gaining. We have Ikeja Hotels falling this week. We have Red Star. So we can see it's red zone across board. The only company that gained apart from Skyway Aviation is University Press. They were also on our list last week. For construction, the only mover is GPDC, and it declined by a massive 14.47%. In the healthcare sector, only one mover, also on our list last week, NIMC International Pharmaceutical, fell by 7.82% during the week, losing 7 kobo. So it's a relatively small cap stock. In the agricultural sector, we also have losers. We have the livestock, Ella Lakes, Zichis, the other ones, the likes of Presco and the likes didn't move during the week. So Presco and Okomio stayed and the same. Although if you check the during the week price, Presco actually fell, but probably because it didn't reach the requirement for the tiered pricing for it to move, it stayed flat during the week. For the conglomerates, we also have Custodian and Transcorp falling. The same story as last week. Kirigu under utilities also fell. We also have the natural gases. But natural gases, they didn't move at all. They stayed flat during the week, same as investment. On the whole, the markets closed negatively, and June appears to be a downer month in the quarter, and we are hoping that July doesn't follow suit. So we had massive gains in April and May, and June is trying to get people into their senses, and hopefully we can recover in Q3 2026. Thank you all for listening today. So don't forget to follow up on all our social media platforms, and on YouTube, click on the subscribe button so you could get notification once we post our videos, and you can stay up to date with what's happening in the markets, and this can help you in your decisions. Thank you for your time. See you next week.